Hi, this is Michael Waits, and welcome back to India Game Changer. We are joined today by Sagar Agarwal, a co-founder and managing director of Beam's FinTech Fund. Thank you so much for coming on the show. Let's give our audience a little bit of your background, just for some context, please.
Thank you, Michael, for having me over. Appreciate this, and I look forward to the conversation. And I think it'll be good to get out to the global audience and share what we're doing in India, and obviously what India is doing at the same time, right? Because a lot of people are keen to learn about India, know more about India as well. So pleasure is mine to be over here. So thank you once again for doing this.
Thank you.
About me, right? I think it's been an interesting journey. It's been 17, 18 years in the industry now, Michael, right? Um, Born and brought up in Mumbai, typically middle class suburban Indian middle class boy, growing up with the aspirations to obviously join family business, which is how typically Indians grow up, right? As you know, um, good thing is that we all are blessed with family businesses, right? So there is always an opportunity to go over that direction. Having grown in that journey of a middle class suburban Indian, where you've seen day-to-day lives of your father, your mother, your extended cousins and family members, you realize that it is great to have a business, but business has its own challenges and vagaries every day, right? And as an individual, do you want to be an entrepreneur, or do you want to be a professional and earn salary, right, which is a little bit more secure and safe in the life cycle of the journey? So going through that growing years of my life, or formative years of my life, we were always ingrained with the idea of thinking about business, not necessarily thinking about job. But given the exposure that I had in my journey, we felt that the best way to start a business is to learn at somebody else's expense and then start your own journey, right? So that's been my growing up journey in India. Did my schooling, graduation in Mumbai, did my master's from a university called SP Jain. It's a top 10 university in India. Finished my master's from there. And as luck would have it, as I had planned always in my journey that I would want to do entrepreneurship, but after working for a couple of years, um, job happened, placement happened through campus. Joined a company called Evolvence, which was a Middle East-based private equity fund, and they were one of the
Oh, cool.
early entrants to come to India to do private equity from Middle East to India, and that was the golden opportunity. And I would say I was really blessed, Michael, to have that, because not everybody gets a first job out of your college straight into private equity, right? And
Yeah.
somebody who's setting up a new shop. So I got into that journey, spent 11 and a half, 12 years straight up with them. In that 13 years, Michael, I learned all the tricks of the trade, all the journeys, right? All the challenges, all the outcomes of building a business that was needed to learn with somebody else. And as 2019 hit, and I had spent that many years doing this, building this for somebody else, it was clear for me that I wanted to build something on my own. India has been a booming economy for the last 20 years, and the opportunity for the next 20 years look even more brighter. And that's
Yeah.
why 2019, I decided to move out, set up my own shop, joined hands with very bright group of people. And again, when universe conspires for you, everything falls in place. You have to obviously work hard, and dedication and perseverance and all of that thing. You have to be determined, but universe conspires for you. And I got the right set of partners in 2019 again, and they decided to do a JV with me, a group called Venture Catalyst. And today, as we speak, 2025 now, it's been 5 years, 6 years in the making. We already have a very, very established brand and presence in the country. We are India's first growth stage private equity fund, Michael, doing fintech and financial services. We invest in tech companies, we invest in non-tech companies. It's our first fund. It's a north of $100 million AUM business today as we speak. So that's a quick summary and journey of from growing up in middle class to going back to entrepreneurship from professional journey. Lots of experience across the board, and seen in India and outside India. So when I was at Evolvent, I spent 12 years outside India, but investing into India. So I was traveling up and down every month, right? Did that for 11, 12 years. And then finally, as the opportunity knocked the door, I decided to move out and build a platform. So that's a quick summary
I
and
love it.
journey about India, yeah, and my
I
journey.
love it. I love this idea of getting paid to learn. I talk about it all the time with my team. It's the greatest thing in the world, as opposed to having to pay to learn, which is what most people do.
Yeah.
And I also like this idea that the universe is not conspiring against you, but conspiring for you. It's in your favor.
That's correct.
And I think if you live a good life, the universe does conspire for you.
Absolutely.
Let's jump right into this, though, into Beams. What is the thesis for the FinTech fund here? And which themes inside the FinTech industry, because there are a bunch of them, do you think are poised for the biggest growth?
Let's start with the thesis first, right, Michael?
Yep.
If you look at India as a geography, right, India has largely been a services economy and consumption economy that everybody in the world knows, right? That we are the exporters of services. We're not the manufacturers. China is the manufacturer of the world. We are the exporters of services in the world, right? So having been a services economy, right, financial services has been the backbone of the services economy forever in India. 1991, the country got liberalized. Uh, Nationalization to privatization started happening of banks, telecom industry, private oil companies, infrastructure companies. All of that journey from 1991 led to creation of a very robust industrial ecosystem in the country. But all of that can only survive with a backbone of a strong financial services economy, right? And that was very clear to me from day one that if India has to grow from a $4 trillion economy to a $10 trillion economy or a $20 trillion economy, financial services as a sector has to grow leaps and bounds and step in step with the other industries so that they can support rest of the industries. It's the backbone of every economy in the world, including India. Having seen the importance of this sector, right, it was very clear to me that this sector needs to digitize. This sector needs to go digital. This sector needs to go online. The demand for new age consumers, right? And now we have multiple levels of consumers. We have the millennials, we have the baby boomers, we have the Generation Z, Generation X, Alpha, Beta. I don't know how many more versions are coming out of the ecosystem, but there are a bunch of these consumer class who are a little bit more and more tech savvy every generation, right? And that tech savvy population doesn't want to go to a branch, doesn't want to go to a physical store. He wants everything on the app, right?
Yeah.
And that's why for me it was very clear that India has to move digital, and there's an opportunity to build new age technology-led companies which are offering financial services to the consumers of the world, both businesses and consumers across India. And that's where, for me, it was very clear: can you go out and provide capital and the ecosystem to the new age entrepreneurs or the entrepreneurs who are coming from larger organizations and wanting to build a digital journey for the consumer and businesses? And can you provide them capital and resources and the network and the relationship and the guidance to build a new age financial services company? That was a pure thesis for me. The mission was very clear. As India has to grow, people have to become accessible. Financial services has to become accessible, affordable, reachable, and in a much more digital format, right? How can you achieve this? You can achieve this through fintech and financial services, both combined. They are hand in glove. They cannot work mutually exclusive. They have to be mutually together constantly to create an opportunity. And having seen this, right, from all the way from the early days of 90s to 2000, 2010, and 2016, that's when I was very clear that 2016 was a pivotal year, Michael, for me to decide on this strategy even more. Because 2016, one major thing happened in India: demonetization happened in India.
What happened? What was that?
Demonetization happened in the country.
Yeah.
When money was taken off the streets, right, fundamentally, and when demonetization happened in India, everybody was forced to move online. And when everybody forced to move online, you need platforms, you need apps, you need digital ecosystem. And that's when I realized that now the country is ready to go digital. And fintech was the only way to take country more and more digital. And that's where Beams was conceived: identify the founders, provide capital and resources, enable them to grow from here and build the next billion-dollar companies in the country.
Do you want to talk? Because something else happened as well that I think is really important, and I don't want to stop talking about it. And that's UPI. I think the Unified Payments Interface is actually really important because this is part of that demonetization.
That's correct.
Which means that the fintech rails are out there for everybody to use with support of the government as well, which means that the government is essentially telling people, I don't care if you're the smallest shop owner in a tier 4 village or the biggest restaurant owner in the middle of Mumbai or Delhi, you have to be digital, right? And that from an investment standpoint means, okay, now the game is on. Yeah,
that's correct. So taking to your point, right? Demonetization was the beginning of all of this journey, right? UPI, which is a payment ecosystem, which was established by the NPCI, which is National Payment Council of India, along with think tank, right? The iSpirit think tank, which was there to support this. What they did, they build we call it Jan Dhan Trinity, right? That's the word they use, Jan Dhan Trinity. What it means is that first you provide unique identification to every consumer in the country. every individual in the country. That's the green card of the country. That's the social security number of the country. It's called Aadhaar in India. You provide Aadhaar to everybody. So every individual in the country has an identity card which is linked to your bank account. So when you have an identity card linked to your bank account, the digital identity of that individual is created on day one, right? Second, you provide internet to that person to go online, which is where Reliance, in partnership with the government, launched the largest internet cable economy in the country, where fiber optical cables were laid out across the country and internet was made available at the cheapest possible rate by Reliance or Geo. Now it's called Geo, to everybody in the country. First happened was Aadhaar, then happened was the Geo. Third, government pushed for zero savings bank account, zero balance bank account for everybody. Anybody who wants to open a bank account can have a zero savings bank account or zero balance bank account, and that led to prevalence of opening of bank account in the country. So then bank accounts were opened, internet was provided, and national identity card was given, and now all of this is ready. Now you build a payment ecosystem on top of that to enable the movement of money between people, between merchants, between government and people at the same time. So B2C, B2B, B2G, G2B, all of that happened because of this entire infrastructure. And this all happened between 16 and 17. People have not realized it, but back to back, all these three things, like demonetization, UPI, Aadhaar, Geo, Aadhaar, Geo, everything happened at the same time, right? And that led to the country moving online for the first time. And today, UPI is a force to reckon with. UPI is not only in India, UPI is going outside India. Today, nearly $2 trillion worth of money is getting transferred annually through UPI. India's GDP is $4 trillion. 50% of that GDP is coming through UPI, right? That's the scale and size of impact UPI as an ecosystem had. UPI was just a transaction platform. On top of that, players like Amazon Pay, Google Pay, Phone Pay, Paytm, PayU, the first set of payment companies came in the country. They not only gave machines and QR codes to the merchants in the country, they also gave QR codes and the identity cards to the consumers, and everybody started transacting through UPI. Today, UPI is the largest digital payment ecosystem in the country on which bunch of platforms are built out. So I'll take a pause over here. Yeah.
I was just going to say, I think it's been transformational. I cannot have a conversation about India and the finance and fintech system without going through UPI again. I just don't think it can be talked about enough. Can I ask you this, though? So you're looking at this whole ecosystem and you're trying to figure out, okay, there are all these sort of existing companies, big banks, big insurance companies, right? And, you know, incumbent providers of a whole bunch of services. But if you want to have innovation, well, then you're going to have to start investing in smaller companies. Right. That's just normal. I remember I was at Goldman Sachs for years. We were doing some really great stuff, but a lot of the stuff that was new that we did were from companies that we bought and brought in, because a lot of new tech was getting built by companies that were just smaller and more agile.
Yeah.
How do you balance those things when you're making your investment decisions? Do you know what I mean? Because the hardest thing for a startup to do, even if they're in the growth stage, right, is to convince a big incumbent to deal with them, not from a competitive standpoint, but from a let us help you standpoint. How do you balance that stuff?
Fair point, right? I think the challenges versus incumbents has always been the argument and debate, right? In any emerging country and a developed country at the same time. Same thing in India, right? A lot of entrepreneurs, when they decided to 2016 onwards, then they decided to move out and start their own set of companies at the same time, right? The biggest question was that, will banks work with them? Will insurance companies work with them? Will payment companies work with them? Will wealth companies work with them, right? Will this really work into a conversation? I think what people realize is that instead of going head on against them, let's try to solve our problems that they are not able to solve internally, right? Because none of these large incumbents have 500 people tech team on the ground to execute digitization, engineering, workflow automation, process systems, consumer onboarding, processes towards businesses. A lot of these were technically started outsourced to new age entrepreneurs. And those entrepreneurs came and solved small problems for financial institutions. And that became important enough for financial institutions to outsource that without really having that impact, right? So starting with starting with identifying the customers, sourcing of the customers, underwriting of that customers, transferring money to those customers, collection of that customers, payment of those customers, right? Getting more and more merchants online, right? Providing software automation across the businesses, providing API infrastructure for banks to go and talk to more and more software, right? So when you build the consumer layer and the business layer, then you need to build the API layer. Then you need to go and back improve your upgrade your infrastructure, right? So upgrading the infrastructure layer. So it started from all the way from the front, acquiring the consumer, moving all the way back to upgrading the infrastructure of the banks, API infrastructure, security layers, cybersecurity layers, data warehouses, data lakes. All of that started getting developed step by step. And it's a question of buying versus renting versus competing. A large incumbent always realizes that I don't need to do everything by myself. But I am good at. I'm a capital. I'm a trust of capital. People believe in me. People trust in me. I should use that trust to improve my process and systems in partnership with the new age companies, right? And both win-win at the same time. There's always a bit of a push and pull between the margins, right? Who gets the most margin? Who gets to own the customer? But fundamentally, if there's enough and more pool available for everybody to do, then everybody grows the ecosystem at the same time. But it's always a question, right? It's always a challenge. It's always a convincing. But today, what we've realized is the guys who understand the problem that financial institutions are facing and the consumers are facing and the businesses are facing, and if you solve for it, and these are not short-term problems, these are going to be perennial 10-year, 15-year, 20-year problems. Those entrepreneurs and those teams is what we want to back because they understand the problem and they're solving from the bottom of it.
So this brings up a really good point for me, though. I always want to know from an investment professional like you is like, what makes a great founder? And I don't think it's a simple answer. But the follow-on to that is, particularly because of the investment stage where you're investing, right? You're not investing in early stage startups, right? Where there's no product. You're investing into an existing company that needs growth capital. The team is generally already there. But here's the thing for you, though. Like, I'm curious what you think makes a great founder. But further to that, do you ever consider what I call like the Eric Schmidt experience at Google? Do you know what I mean? Where, look, Sergey Brin and Larry Page were great founders as well, but they realized, like, if we're going to grow into like a real bona fide company, we need like adults that have run businesses before, right? And we're going to train to be this future CEO, but we need a real person who can really do it. Do you ever think about that when you're making your investment? Like, you're going to invest a decent chunk of money, you're going to lead around into some big company and then go, maybe you guys or gals should consider this person who works at ICICI to come in and run your FinTech kind of thing. So there's two questions there, but you understand what I'm saying?
Yeah. So to your question, right, I think, Michael, it's something that I keep, even today, after 18 years being in the industry, I keep asking myself, right, are we picking the right entrepreneurs, right? And do we have the right knack of picking the entrepreneurs, right? And it's not easy. It's an evolving exercise. Every time you learn more, right? Every time you learn more, every time you invest money in a new company, you feel like this could have been a better decision than that, right? And it's always the case, right? And it's never done. Coming to your point on entrepreneurs, right? I think what I always believe is that the sector, which is fintech and financial services, like unlike US and Europe and other parts of the world, it's extremely regulated in the country like India. Extremely regulated, right? And because you're under regulation constantly and it's covered under all corners, you need somebody who understands regulation, somebody who's been in this journey for a very, very long time, somebody who's experienced the thought process of a regulator in the previous role in Aadhaar, right? It cannot be somebody who decides to suddenly start a fintech and starts doing business. It doesn't work like that in India. You need somebody who's understood the challenges of regulation and building a company within the box, right? If you have those entrepreneurs and who's come out from a larger organization, whether it's ICICI, HDFC, Kotak, Axis, IndusInd Bank, SBI, those guys, or similar other companies in international markets who've come out and saying, hey, we understand the problem, we're building a solid team around it, we're solving a mission critical problem for a consumer, business, or financial services, we're raising good capital, we're showing trajectory, we're parting equity to my team, we're giving them enough and more shareholding, we are empowering the people, and good set of talent is coming and joining them, then it shows the thought process of the founder, what he's trying to achieve, right? So what we look for, somebody who has a clarity of thought, somebody who has a vision to play, somebody who's here to build a legacy for next 10 years, 15 years, 20 years.
Yeah.
Somebody who's reasonably settled in life. That's a very important factor we look for because we don't want people to be trying to make their ends meet and then trying to build a company.
Yeah.
Right? We want people who are reasonably settled. When I settled, you don't need to have a $10 million house. You have enough and more, $300,000 house. You have a kid, you have a wife, you have life going on as normal middle class individual. Now you have all in this business. You have your equity. You have your team. People are inspired by you. People are willing to join you. You are willing to do everything to make this company work, and you understand the pain point, and you have solutions to the pain point. What you need is more network, more relationships, more capital to be able to expedite this to 10x growth, right? That's what we look for founders. There's never a right answer, Michael, or a wrong answer to identify a founder. It's constantly evolving, right? Someday we'll like this founder, someday we'll like that founder. So if you look at my portfolio today, whether it's Neo, PropCap, Credgenics, Insurance Deco, SK, or Infinity, all six companies, right? All of them come from different backgrounds. Some of them are professionals, some of them are promoters, some of them are entrepreneurs, right? Some of them are promoter turned entrepreneurs, some of them are professional turned entrepreneurs, right? So the different journey altogether, and we learn different things from all of them, right? And in my last 15 years also, I've seen that there's no cookie cutter model. When you sit in front of the guy, when you look at his history, look him in the eye, you hear the story, and that narrative has to match with what he's doing on the ground. So when all of this comes together, that's when your gut says that, okay, he is there with you for the long haul.
I like this idea as well. And I would support this too, that the founders of these companies should be like settled in life. I think there's myth of like a 19-year-old in the basement or a 25-year-old in the basement struggling with ramen is like a bad idea. Nobody builds a great company this way. I do think it's really, it's a mythical unicorn that I don't think happens. I think the best ideas are, like you said, I'm going to say guys and gals like in their 40s that have families, that have had jobs, that know what the market needs, and then says, I'm settled enough now where I feel like I can attack this thing. And if I have the right partners, like you said, the right ecosystem, and I want to talk about that in a second as well, because I think it's important. If I can do that, then I can build a mature, fast-growing, transformative company. But if I'm just struggling to eat, it's just going to be so much harder. And there's going to be a guy out there who's not struggling to eat, who's building the same thing. And I'm telling you, that guy's going to win. I want to ask you this too. If everything you're doing is in sort of the FinTech or FinTech adjacent family, it must mean like that if you're building embedded finance, and you're also building platforms and networks, that one of the things that those platforms are going to need is embedded financial services. You mentioned 6 companies in your portfolio, but when you invest, you also think this company here could help this company over here as part of your own ecosystem. Do you know what I mean? And support each other, because if this one's growing and this one's related to it, then they should both grow faster together. Absolutely. Does that make sense?
So what we do is it's core of my thesis, right? And I think I want to add that point. Beyond just understanding the digitization of the financial services in the country, as I said, we want to provide capital plus resources as a thesis, right? What is resources? Okay. I am inviting more and more banks, more and more NBFIs, more and more payment companies, more and more insurance companies to become my investors. When they are my investors, they are willing to go out and help my portfolio companies
for sure,
to help them grow. Then I don't need to knock 20 doors to get to the senior management of that company. I can pick up a phone call and get my founder sitting in front of the senior management of that company. Point number 1, right?
Which is super powerful.
Yeah, which becomes really helpful. And my company has seen tangible value add because of this, and that they have come and said, Sagar, we have so many investors on our cap table, but you are the guys who roll up your sleeves, understand the space, and can actually create value. That's first value, where our LPs, our financial institutions work with the portfolio companies. Second, portfolio companies working with each other, right? Because traditional business helping new age business helping traditional businesses, payment company helping insurance company helping cards business helping supply chain. So all of these is in working together with each other. And I get references and feedback across this ecosystem, right? So we're constantly filled with more and more information on whose tech is working, whose team is working, where are the shortcomings, who's not doing, right? And then we're able to guide the companies in various aspects of the business, saying that, hey, we're getting this feedback about you. What are we doing about this, right? So that enables them to not only grow their business, so portfolio companies working with each other, LPs working with the portfolio companies, my operating partners working with the portfolio companies. So all of this ecosystem is in a way dependent on each other, working with each other, learning from each other, and thriving with each other. And I believe if this becomes a machinery for me, for us in the next 10 years, we will provide the largest ecosystem in India to companies, to entrepreneurs, and they will want to grow on their own because the ecosystem provides all the support that they want from us.
Can we talk about why it's so important because this ecosystem that you're building, right? If you're LPs, so if your investors are also the people that your investee companies would want to work with, right? Like you said, you can't minimize this idea of, I really want to call the most senior person at this bank or at this insurance company or at this other financial services business, but I don't know her, so I can't get in touch with her. But if they're part of your ecosystem automatically, then you can just automatically connect to them. You can't minimize just that one thing alone, how important that is for business growth. Because if they're already invested in that company, right, then it's in their best interest to help them out and make the connection and even test out the product with them. And that can't be minimized, yeah?
Absolutely. I think it's not only, so there are indirect equity in my fund, right? So there are equity holders in my fund, and my fund holds equity in these companies. So they're technically indirect equity holders in these companies. At least they give a due consideration to the tech, the solutions. They give due, I would not say preference, because every financial institution has to do everything on arm's length basis, right? But at least you get a right foot in the door. What happens today in majority of the business, getting a foot in the door is very, very important. Today, opening a company has no barriers to entry, but opening a licensed business has barriers to entry, right? That's very important. So today, every financial institution gets approached by thousands of companies on a daily basis saying that we can enable you, we can partner you, we can guide you, we can improve your technology. But for financial institutions to choose from so much lot is far more difficult. But if there's a private equity-backed company, it also becomes a preference for them saying that, hey, these guys are PE-backed, they've raised capital, they're running an organization, they're profitable, we should give some due consideration to some of those aspects of the business as well. So the foot in the door becomes very, very easy, at least.
Exactly. Do you think about whether you're investing in companies that are just a play for India, which itself is just a massive market, or do you think about these companies should think about addressing problems for the entire world? Right, because you mentioned before, India has traditionally been an exporter of services.
Yeah.
So just historically, the guys and gals that are building the stuff that you're investing in should know that, like, okay, there's a huge market here, which needs to completely digitally transform. And we're participating in that growth. Like you said, if you go from a $4 trillion economy to a $10 trillion economy, everything's going to get better per se. But while that's happening, the rest of the world should also be growing. Is that also part of the opportunity for you?
It's always a question that we've debated a lot internally, right, Michael? Should you first solve the India problem and then think about going outside, or should you simultaneously go outside and solve the problem over there as well, right? It's always a trade-off that we've discussed at length, right? At companies as well, we've had both discussions on these points. The good and the bad part, right? The good part is that opportunity exists beyond India to build over there. The good part is that India itself gives you a large opportunity, right? So if you build in India for next 10 years, it's not enough, right? Because close to 1.5 billion people now, right? You need to solve for them first. 75 million enterprises and the small businesses in the country, you need to solve for them first, right? If you solve for that, and then you have enough and more time and resources to go outside India, then you should definitely go outside India. But we always believe that if you're not able to, if there's enough and more opportunity in the country, let's solve for that first, right? Now, coming to outside India, what we've also realized, Michael, is that some of these geographies are not developed, right? So if you talk about only emerging markets, like Southeast Asia, Africa, right? They are not yet there in terms of the infrastructure that we have. We have the UPI, we have the Aadhaar, we have the eKYC, we have the demonetization, we have internet, we have the DigiLocker, DigiSign. All of this infrastructure is built in India. So people can build on top of this and provide that services much better and faster, but a lot of that is not built in other parts of the world right now. So what happens is when the companies go over there with tech stack, they realize, wait a minute, a lot of this is not built, which means we have to build this now, right? And then you end up not only looking at customer acquisition, you think about building the infra again, right? Which requires a lot of time. So we tell people that try and see if you can get large enough market in India, or then go straight to the US. Because US is the biggest market for, at least for SaaS businesses, right?
Yeah.
Software businesses, enterprise software businesses. Because if you either you build in India or you go to the US, then you have to think about US as another animal altogether. You need to have your teams, process, system, sales team on the ground to be able to execute it. You cannot do half India and half US. You need to attack this into two different geographies, two different spheres, two different mindsets.
Are you worried about global politics at all?
It's a very important tick mark in our thesis when we look at investment companies, right? We want to make sure that no global political interference should impact the core business of the company, right? So regulations, domestic regulations, which is India regulations, and global geopolitics, right? These two things we consistently look at it, that nothing should have a direct impact on the business. And if there is impact, it can be mitigated through diversification, right? So we constantly have a discussion. Like, for instance, we were looking at a company, Michael, which was providing middle class Indian study abroad loans to go to US and Canada and UK, right? Large market, Germany, fourth market, Netherlands, fifth market, Australia, sixth market. So we evaluated this company. They were basically onboarding customers in middle class India who had to spend $50,000 to study in the US and never had the money to do that, right? Or the parents did not have enough money to do that. And it's not $50,000 now, it's $100,000 over 2.5, 3 years, right? That's the money you need to go send your kid abroad to study abroad. And then job is not so easy. You need to wait for another year and a half. So it's a good 3 to 5 year loan product which needs to be given to the parent and the student. So we were spent a lot of time in the geopolitics, right? And we realized that it's such a complicated maze, right? What's happening with US, what's happening with Canada, what's happening with UK, what's happening with Germany. It's so difficult to underwrite all of this sitting over here and saying that, hey, we understand geopolitical risk and let's invest in that. So when our companies wants to go abroad also, we're very mindful of it, right? Visa issues, immigration issues, more protectionism, deglobalization to an extent, globalization to an extent. Right? So a lot of these questions do come into our mind, and we want to not necessarily get, maybe from a portfolio of 10 companies, have one company which is also looking at global aspect, 9 companies which are looking at domestic aspect, right? Because that allows you to be less impacted with developments globally as well.
So the last thing I want to ask you is, are you concerned, because this has been fascinating and I've learned a ton of stuff. I really mean that. We should do this more often, actually. How do you balance this thing about fund concentration, but still invest in enough companies, if that makes sense, right? Like you said, you look at your portfolio, there are 6 companies, you said?
That's correct.
It's a highly concentrated portfolio. So as a risk manager, how are you thinking like, okay, is it big enough? Is there enough? Are there enough companies there? Do you know what I mean?
Yeah. So very good question, right? We're going to have 10 to 11 companies. So we're going to do 4 or 5 more assets in the fund. So it'll be total 10 to 11 assets. What the way, this question has been asked to me by a ton of LPs globally, right?
Sure.
How do you take the concentration risk? Because you're not talking about we're talking about India risk, we're talking about sector risk, and we're talking about fintech and financial services risk, right? You're the nichest manager in the market that we want to deploy capital, right? And if we should deploy capital, and why should we take that risk? So for me, the simplest argument has always been, Michael, right? Diversification across 10, 11 companies is absolutely one way to think about it. But the most important, what are my companies doing? What segments they're catering to? Yes, they are fintech and financial services, but they're catering to the end market, right? My first company, Neo, they cater to do affluent middle class who are traveling abroad, right? Who are going overseas travel. So we are playing the travel industry. My second company is providing supply chain finance solutions to mom and pop entrepreneurs, right? So it's an MSME category, not micro entrepreneur category. So if India grows, MSME grows. If India grows, affluent middle class grows, right? So that's the second way to think about it. My third company provides software to banks, right? So again, they're providing software solutions to banks. So what we are doing is that we're saying we're going after segments which are not necessarily correlated. They have different correlations to the Indian economy. And if you want to play India, you want to play consumption, I am giving you consumption. You want to play gold, I am giving you gold. You want to play software, I'm giving you software. You want to play insurance, health, I'm giving you healthcare. I'm giving you every possible thing, right? Under one single portfolio. It's just the lens that what you look at it. Yes, financial services is the core business for all of them, but the end goal for them is different. Somebody's enabling affordability, somebody's enabling travel, somebody's enabling gold, somebody's enabling healthcare insurance. So there's different segments at the end.
I like it. Okay, I'm going to let you go. Sagar Agarwal, a co-founder and managing director of Beam's FinTech Fund. Really, really fascinating stuff. I super appreciate your time. Thank you so much for doing this.
Thank you so much, Michael, for having me. It was amazing. It was such a good conversation and different conversation I had over here as well with you. I'm hoping, I'm sure we would have missed a few points here and there, but always would love to do it again. If ever you want to do it, feel free to reach out. Thank you so much, and looking forward to staying in touch as well.